Okay, good morning everybody. Mike Niemiec here, middle of the week. It's Wednesday, August 7th. Opening calls and comments here. We got the grain trade pretty much stagnant right now. You know, we started out the week maybe a little bit disillusioned. We had the trade talks with China, maybe thinking that the market was going to go in tank. We had the stock market go on down. When we have our crop progress and condition numbers come on out, the crop is not getting any better, but then again, we don't know what's the crop going to be. It's delayed. And so we just have all this little bit of uncertainty, and it just seems like every time you want to say something that's positive, it could be negative, and vice versa. So that's where we're at right now. And once again, the overnight trade is pretty much steady in the wheat, and maybe up 1 or 2 in the corn and in the soybeans. The trade talks, nothing really new going on there. It sounds like that Trump's going to come on out here and help the farmers again. So we've got the battle as far as that goes, as far as the Chinese not wanting to buy any ag products. So we've got that still going on. As far as the weather goes, that's getting a little bit more two-sided as well. We continue to see rains move through the Midwest, but they continue to be a little bit below average. And now in the extended forecast, because we're late in the crop season right now as far as development goes, that now we've got 11 to 16 day forecast that's talking about ridging coming back to the Midwest. That's going to be bringing below average precip again and above average temperatures. So once again, when the beet crop is still developing and the corn's still soaking, what's that going to go do to the crop? So we have no uncertainty there. And then we also have the trade guesses that came on out from the newswire services for what the USDA may say on Monday's report. And now we're looking at a 88 million acre average guess for the corn versus what the USDA was at 91.7. Maybe not as deep as maybe what prevent planted acreage is going to suggest, but we're looking at less acres. The average guess for the yield is 165 versus 166. The bean acres 81 versus 80, so we're getting a little bit more bean acres, but once again the yield 47.6 versus 48.5, and we still have a long time to go as far as finding out what that yield is going to go and be. The carryout numbers are coming on down as well for wheat, corn, and beans versus what we had this year, and also a little bit in the world. So you see this two-sidedness you have in here. Is China and or the trade talks going to work out? The rest of the world is still out there producing at these prices, so that's still a cap to the marketplace. What do we have over here? Our demand is not all that good, and so on and so forth. We're out there in a stagnant trade. I will have to say this, putting it all together right now, I would have to say what we got to overcome is D-Sweet over 505, December corn over 425, and November beans over 895. And having said that, yesterday was the cutoff date for the commitment maturity report coming up on Friday. And what we're seeing is that that's all controversy as well, because we've been seeing the open interest come on and up, but it seems like we're adding to our net short positions in the soybean complex and still lessening our positions in the corn and the wheat. But once again, we're going to go and have stagnant trade and wait to see what happens with the USDA on Monday. These are my opinions, not that of ADM or ADMIS. I thank you.